Good evening, all. Ira Epstein, and here we are with your metal market wrap-up. And this wrap-up is for the evening of Tuesday. And we are at, as you know, Valentine's Day. And it was a sweet day, but a wild trade day on this February 4th, 2023. So let's talk about the markets. We're getting on to 6:45 at night. And the CPI numbers came in hotter than the market thought. More important to me, or one of the most important things, is that the 6-month T-bill went up and finished over 5%, like 5.07, right in that area. So what that tells me, I consider that a surrogate for the Fed fund rate. I look at this as just saying the Fed's got to stay longer and keep going until inflation comes down. And now we know labor's giving the Fed a problem, especially the service sector there. And CPI is giving them a problem with the new weighting of rents accounting for almost half the gain. Rents don't fall fast. Remember that. Rents, it takes time for them to work in back and forth in the economy. And therefore, I am not in the camp that thinks there's going to be an easy way at all to get to 2%. In fact, I'm wondering if it's not a fictional number to get back to 2% inflation when you have this strong of a labor market, when the new weighting takes in rent and other types of numbers with a heavier weighting that it did, which is proper. So I'm thinking 3-4%, yeah, you can work down there over time. I want to make this clear, over time. Even if you dropped right now an eighth, a quarter at a time, it's going to take a while to get these numbers into that 4% range. That's if they did it. Right now's reading was a jump over December. So what did the markets do? Well, you were all over the board in the stock indices and in the metal markets, bit of pressure on them. The dollar index was everywhere. Look at the range today. You had a 105-point range. So which way was it going to pop to? And that was the question. The good news is copper's moving away from the $4 mark. You're in the energy markets, that we did put on yesterday. As it turns out, 26 more million barrels are coming out of our strategic reserves. Do we really need to release 26 million barrels of oil? But it's part of a 2015 budget, a compromise that was done, so they're doing that. Mr. Biden wants to buy back in the $70 range. It's still away from there. And, OPEC came out and they were talking about some inflation numbers and they see growth again. Not tremendous, but they see growth and they see energy prices holding and then rallying. In the gold market, as we're slipping down midweek, we're down 0.5 percentage point, 0.47. Not a big break one way or the other. But the daily chart still has a lot of problems. And the pattern is still one of lower highs, lower lows. What would make this market rally is if the dollar breaks. Can the dollar break when you looked at the CPI number and saw it that hot? Now, you're going to get a PPI number a little later in the weekend. Tomorrow, we have a whole slew of data. I was writing about it tonight, and I'll let my full research people see that. But there's a lot to be covered there. Tomorrow, I'm saying. The trend is down. The bias is down since you're under the 18-day average of closes. So because you've got these two moving averages, and we've talked about this over the past week, 1810.90, 1801.50, those are one of the potential support zones, but you always first go to wherever the Bollinger Band is. And that number is 1838.60 and dropping away still. So I contend that what I think the pros are going to do is they're going to be selling these markets on rallies. I think you got a shot at accelerating the break quickly if you take out the lows of today, which were Tuesday. And that number, just so that we know what I'm talking about, was 1852.50. Right now you're at 1865.30, but that could set you up for a breakdown there. And do I think the pros are going to sell the rally? As long as you don't take out this low first, I think they'll sell the rallies in the market looking for lower lows because you now have what's called an embedded reading where the slow stochastic puts both numbers under the 20 level going sideways to lower, and it's exactly what you have. Until the red number closes over 21, I contend the pros are going to be selling this market short. Silver continues to lose to the gold. You can see the differential right here on the ratio chart. The battleground is shaped up to be the 100-day average in green with the Bollinger Band, but it's an embedded reading. You might be headed down here and surprise people to the lower band and the 200-day average. That's right there in the gray. I don't see anything right here that is friendly. I contend if the market gets a bit of a rally in it, the pros will want to sell it until the red line closes over 21. In the copper markets, you just were oversold and you're getting a bounce. So if the market can rally a bit more, I'd look for the resistance around the 414.50 level. I don't see anything yet that's bullish. Close over that number, then we can start talking that the market's bottomed out again. Hasn't done that yet. In the platinum, the market, similar to what silver did, it fought here and then it moved down to that lower number as it had the embedded reading. So this is the exact type of play that I'm talking about in the silver. Can it continue lower? Yes. So far, the market has shown no propensity to want to get back over those moving averages in any way, which is interesting and bearish for that market. And now you're dragging the palladium down with the whole metal market, but it is in oversold territory. As for the dollar index has had a downtrend, made a run today to get back to the 18-day average, got to 102.39. That number is 102. You round up 37, so it got within 2 ticks of it, and it's overbought. Not embedded, just overbought. What do I think tomorrow's going to offer? Well, if you're an in-and-out trader, which I like my position trading, but this is one of the tools that traders are going to look at. They're called pivot points. And the markets, there's a formula. You have it in your charting software, most likely. If you have a good piece of charting software, you have this. How do you use it? How do you tie it together with momentum? I teach you how to do this in a free charting course. It's all videos. You see what I do, you do the same thing, and away you go with it. It's pretty darn interesting, and it gives you for free a way to learn how I teach, and then you can move on to the enhanced Bollinger course and some of the other courses, the outside day course and my full charting course. How do you get it? You go to our website under free offers, or you just move your cursor up here, give it a click, and away you go. I'm Ira Epstein. You have a good day. Can't wait for tomorrow. Should be very interesting. It's sort of the day after. Take care.